Well guys, it's that time again. It's time to talk about the stocks that I'm looking to buy right now today. So far, our recent picks like SoFi are up over 100%. We got Airbnb up over 30%. But let's take a look and see, are those stocks actually still on this list? And there is also a few new stocks on this list as well, so you don't want to miss out on any of it. So a lot to dive into today that we absolutely are going to dive into right after you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. So just as kind of a reminder for all you guys and for the new viewers out there, these are just the stocks that are in the buy range for me right now. I actually have 15 stocks on my watch list complete with price targets. And hey guys, sometimes the stocks get up above that price target and I hold off on buying for a little bit. And then obviously other times they're significantly below those price targets. And obviously they would fall right here on this list. Obviously a lot of stocks have run up and some stocks are coming back down. But that's the importance of valuation and why I preach it so much. So that way you understand exactly what you're buying, exactly what you should be paying for those stocks. And then you're able to kind of see the difference between a FOMO run or, whether a stock's really on a great discount or not, or maybe it needs to go on more of a discount before you buy it. And for me, these are the stocks on the biggest discount based upon the valuation that I've given these stocks there. And that's the most important piece to keep in mind is my valuation is going to be a little bit different than yours, and that's okay. It doesn't matter in the end. That what matters is that you do a valuation that you're comfortable with. You've done all the due diligence, so that way you understand exactly what you should be paying for this stock. And don't worry about if somebody's thinking you're crazy for having that stock on your list or this stock on your list. That's okay. I was crazy for having Amazon on my list when it was down in the 80s. Same with Google, same with Meta. All those stocks were right there on my list in the 80s and I was getting blasted for it, and that's okay. And then it was Tesla after that I was crazy to buy at around, anywhere under 150 bucks or so, and then it fell to Palantir and SoFi and a bunch of other stocks like that. And that's just part of the game. That's part of the nature when you're trying to buy stocks on a discount and you're trying to really do those valuations and really seek out where the best discounts are on stocks. That was right there during those times where when those stocks were on that discount. And so that's kind of the way this list is derived. These right now are the best stocks on the best discount based upon that valuation. And yes, stocks come on the list, off the list. They stay on my watch list, but they come off my, list to buy immediately there. And then obviously they come back on whenever they get back down to a more reasonable valuation. Bottom line, these are the best stocks for my plan, my portfolio based upon the valuation that I gave them. So the first stock would be Dividend Plays, guys. And these have been overvalued for a really long time. Kind of think, your kind of old man stocks, legacy type stocks, a lot of other stocks like that. But specifically for me, I'm looking at Dividend Plays, and the reason why is because I'm actually looking to build out a dividend portfolio and build up a dividend pillar in my income pillar. So if you've been part of the group before, you've taken the courses, you guys know and you've seen that I basically like to have income pillars. You got your real estate pillars. I have my businesses that I run that provide income. I have some dividend income that comes in. But for me, as I kind of look at my pillars, I kind of go, well, what would happen if real estate went away? What if all my businesses went away? Could I live on my dividends? Well, I probably could, but I really want to beef that up so that way there's not any change in my lifestyle at all whatsoever that I need to make. So for me, this is kind of another security measure in regards to my income pillars. And what I'm going to do is I'm simply going to build out just a bunch of dividend plays in there to build up that income pillar. So make sure you check out the pinned comment down there as the group is on sale. That sale ends really, really soon. And you can actually see me build out this portfolio, not just the stocks that I'm buying in it and my price targets and everything else for those, but also the reasons behind that and kind of the logic behind each one of those picks. And of course, you can also take the course on income as well, where we talk about those pillars specifically, how to build out those pillars. There's a real estate course in there for you to build out a real estate pillar and a lot of other things like that that are kind of all encompassed. Actually, all of our courses all kind of work together to kind of get you from point A all the way to point Z, and not just stock investing, but your overall wealth building journey. But we absolutely talk about those income pillars, and obviously those dividend stocks are going to be a key component of that income pillar moving forward. And you can see me start that from here from scratch. So the next stock up would be PayPal. And come on, guys, if you've been watching this channel for any length of time, you knew PayPal was going to be on it, despite the fact it's been on a really, really nice run from those lows where it got down in the 50s. And we were able to buy some shares in the $58, $59 range or so. Now it's gone up over 70. And let's kind of see where it goes from here. Is this the start of the next run? Or is it going to fall right back down into that, low 60s, into the 50s range again? I think earnings is going to be a huge key for that. But nonetheless, it started to pick up a little bit of momentum, which is great to see. And I know, guys, before everybody starts yelling at me, it has been beaten down for more than a year now. And I know that's frustrating. It sucks to buy and just never see the stock go anywhere except for down or sideways for more than a year. But you got to keep in mind, this is not unusual and we're coming out of a bear market. This happens during bull markets. During the greatest bull market of all time, you had periods of time where Apple, Tesla, Microsoft, Google, you name it, you name the company during the greatest bull market ever, had periods of time of 6 months, 8 months, a year and a half, sometimes more than that, where they traded flat or sideways. So if that can happen during the greatest bull market of all time, it absolutely can happen to a stock during a bear market. And that's exactly what I think we're seeing play out with PayPal. To me, there's two things that have to happen before this stock really goes on a major run. Now, I don't think it's going to go on like a Meta style run, but in order for it to really get back on its feet and really get back and marching towards fair valuation, they've got to do two things. One, fintech in general just kind of has to get out of the doghouse. And this happens, Wall Street just, I don't know, they put a sector in the doghouse for whatever reason, and it takes time to get out of that doghouse. So that's the first piece. And the second piece is waiting for that announcement of the new CEO, who that's going to be. And obviously, if they pick a very strong candidate there, that could also be the other shoe that kind of drops, that kind of gets people moving their money back into PayPal and really gets the stock moving back in the right direction in a meaningful way. So until those two things happen, I'm not sure where it's going to go. However, this is still a buy for me, and I'm going to continue to buy this stock at these prices. And finally, the last stock on this list, and it's one that hasn't been on the list in a long time. I'm not sure when the last time I actually talked about the stock on this channel was. I have talked about it before, but it's been a long time since I've talked about it. They just actually reported earnings, and that would be Goldman Sachs. Now, they did report lower EPS at $3.08 versus $3.15, and I know it's minor in comparison. And obviously it is concerning that it is down big year over year in regards to that profitability. So that's absolutely a concern there. But I know Goldman Sachs is going nowhere. And more importantly, the way that bank is structured as compared to like a JP Morgan, which is the other bank that I own, that you guys know that I absolutely love. And I understand SoFi is also a bank, but to me, they're not a traditional bank like those two are. That's more of a fintech over here for now. I know they're getting into banking, but the way I categorize them in my head is whenever I think of banks, I think of big legacy banks. So I own JP Morgan and Goldman Sachs. And the reason why I own both is because JP Morgan, number one, is the best run bank in the world by far, maybe ever. Who knows? I can't go that far, but I think that it is, in my opinion. But they are very much well-rounded. They do everything, and they do everything very well, but they don't have a lot of exposure to one sector or the other. As opposed to Goldman is more of a traditional investment bank. That is what their DNA is an investment bank, which means when they really get rolling, they get rolling when M&A activity is high and when trading activity is high and other things like that. And right now, those two things are struggling mightily across the board. Every bank that just got done reported all those numbers being down pretty significantly there. And that makes up a huge chunk of Goldman's business. Now they're trying to move into more of the consumer segment, but it's not in their DNA and it's not what they do best. And that's not why I bought the bank. So to me, this could provide that time period where people kind of get out of favor with Goldman, and we could see a significant discount if Wall Street gets stupid. And obviously, it's not like M&A activity is going to go away forever. It's not like trading activity is going to go away forever. Obviously, I could see it over the past year as to why it deteriorated, but that's not going to last forever. Trust me, there's going to be plenty of companies that want to IPO, that want to do more M&A activity and all kinds of other things like that. That time is coming, and obviously that time will probably start once the Fed starts backing off the rates a little bit here. So for me, that may provide me an opportunity over the next few months to really add some nice cheap shares of Goldman Sachs on the discount there. And remember, if you want to see all my buys in real time and you want to see my watch list with price targets so you can see all 15 stocks, and if you want to be part of that dividend portfolio as I build it out, and you want to have access to the stock analyzer tool completely for free for members, and you want access to the best 6 and 7 figure Discord out there, and take 5 courses for free, I put out, 3, 4, 5 exclusive videos every single week just to the group. We do a live Q&A at least weekly, sometimes more than that. You can slide into my DMs anytime you want, and a ton more. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.